Hello, my dear student. Welcome back to online class. Myself Ashrita from Economics Department. So it is a continued part of this commercial banking chapter. So in the previous part, we discussed about the meaning and function of commercial bank, and in part 2 we discuss about the balance sheet of commercial bank. Under that we discuss about the assets and liabilities. So in today's class we discuss about the investment policy. So, a bank makes investment for the purpose of earning profit. So, usually we can know that banks make investment for the purpose of earning profits. First, it keeps primary and secondary reserve to meet its liquidity requirement. So, this is essential to satisfying the credit need for the society by granting short-term loans to its customers. So, whatever is left with the banks after making advances is invested for the long period to the improved its earning capacity. So, before discussing the investment policy, commercial bank it is instructive to the discussed between the loans and an investment because the usual practice is to regard two as synonymous. The bank is given a loans to the customer for the short period on the condition of repayment, and it is a customer who asks for the loans. By advancing a loans, the bank credit which is temporary source for the fund for the banks, and investment by the banks on the other hand, and it outlay of funds for the long period without creating any credit. So we can know that investment policy commercial bank instructed for distinct between the loans and investment because usually practicing is to regarding two synonymous, and the investment policy of bank consisting of earning high returns on its unloaded loan resources, but it has been keep in a view to safety and liquidity resources in the customer. So the bankers, while making advances or investment, has to observe certain important principles. So they are known as principle of good lendings. The bankers have follows principle when appearing proposal for the advancing loans. So they may be classified into two principles. One is general principle and also basic principles. So under the general principle we can discuss about the principle of diversity, principle of purpose, and principle of security, and principle of national interest and the suitability. So under the basic principle we can there are certain prime because success of banking depends upon the principle. So under that we can discuss principle of safety, principle of liquidity, and principle of profitability. So we discuss one by one. Principle of diversity. Under the general price we discuss about the principle of diversity. So important principle of good lending is diversifications of the advances. An element of risk is always present in every advance, however secure it might appear to be. So the bank is keep on spreading the risk involving in lending over a large number of borrowers, over a large number of industries and areas, and also over different type of securities. For example, has advanced too large a proportion of its fund against only one type of security, it will be run a big risk it's that class for the security sleepy depreciation. And second one is principle of purpose or end as use. The banker must closely purpose for which the money is required, and ensuring for as he can that money borrowed for the particular purpose is applied by the borrower accordingly. The purpose should be productive so that money not only remaining safe but also provide a defined source for the repayment. So the purpose has assumed a special significance in the present day concept of bank. And third one is principle of security. It has been a practice of bank not to lead as far as possible expect against security. So security is considered as insurance or cash to fall back upon in case for an emergency time. So the banker carefully all the different aspect of advancement before granting it. And fourth one is principle of national interest and suitability. So the consideration of national interest serve as good principle to lead and investment. The Reserve Bank of India has issued directive prohibited bank to allow certain particular types of advancement. For example, banks are not permitted to lend money to share or for real estate business. So next we can see the basic principles, like under that we can discuss about the safety. A bank is declared in other people's money, so it cannot include in risk. It should be ensuring the safety of funds while taking decision regarding lending and investment. One of the important risks involving in lending money is the credit risk, that is the possibility of borrowers not repaying the money on due to dates. So, for example, due to the recessionary condition in the economy, due to restriction of manufacturing activity by natural calamities. So, the lending and investment policy of banks are generally decided by the board of director. In India, the Reserve Bank of India also used to prescribe certain sound lending investment policy to avoid credit or market risk. So next we can see the liquidity. So liquidity means the ability of banks to meet the demand for the customer for his money. Simply to put it, the ability of bank to produce cash on the demand. So it is very importantly to be observed by every banks. So banks are able to obtain deposit for the public on the basis of the confidence created by the payback on the money when needed by the depositor. So the liquidity asset should be have following certain characteristics, like that it should be convertibility in cash quickly and easily, and it should be converted into cash without any risk for the loss of the values. So there are two characteristics of liquidity asset, that is it should be convertible into the cash easily and quickly, and second one is it should be convertible into the cash without any risk of the loss of value. And next, profitability. So this is a cardinal principle for the making investment by the bank. It must earn sufficient profit. It should be therefore investment in such securities which was sure a fair and stable return on the fund investment. The earning capacity of security and share depends upon the investment rate and the dividend rate and tax benefited they carry. So each depends on the others. No one or two can stand alone. If one legs of a stool is weaker or shorter, The stool of banking will be unstable. In efficiency, banks, all the three elements are equal, interacted, and interdependent. They are all equal important. So I concluding this class. Thank you for watching.